Good afternoon, everybody. It is 12:59 in the afternoon on this 25th day of September 2018. It's crazy that next week is going to be October. If you guys hear any noise, it's I have the contractors here again today, and they are doing the bathroom. So if you hear any noise, that's what's going on. So we had a little bit of a sell-off going into the afternoon yesterday and in the evening. Really, we just see called today. Haven't updated the title of the stream yet, but it is BTFMD, by the mother effing drop. That is what it stands for. Because this is all, if we don't, I mean, we're just really giving away some free opportunities to get into these lows again. I mean, if we look at what we have going on here, is this. Here's this previous uptrend line that's been holding as a support. This one here, right below here at 6,055. And then we have this extension here on this trend line that goes to right there. It's kind of the same similar area. So that is what we're looking at as far as the upward trend lines looking forward. Now on the daily it looks pretty ugly. There's actually pretty nice heavy volume on the day here, but it's actually less than what we've had in the previous pumps. I mean, we're pretty much even with what we had on the 20th, and the 19th and the 21st, still pretty high volume days. And if we draw some fibs here, if we do a little Fibonacci retracements, you know, if we take these two previous swings, so this swing low to here, we went up to the 50% level before we found rejection. Then if we go from this swing low to this most recent swing high, we're kind of sitting right on that 786 retracement. So there's a 386 and the 786 Fibonacci ratio or levels that are sitting right here, slightly above the 301 4/8 major harmonic. And yeah, this should be a pretty strong support zone. We should see price action move in to find support and see this top up. You know, if we look again, if we zoom out and we look at the entire move going from well, actually, let's look at the whole price history. Let's look at the volume profile for this. So if we scroll all the way out to all the data that we have for Coinbase, obviously, when you spend, Coinbase goes to early 2014 all the way to 2016, 2017. We have the major buying zone down in the $200 range. That makes sense. But then if we go over to really the July-ish zone of 2016, look at all this buying pressure in here. And then if we go to the first major swing that we had on last September going into the December-January months, right where we're sitting is the volume point of control. Okay, this is the highest volume traded zone for Bitcoin looking past the year from, you know, if we go back to, what are we looking at? July down here. So the next point of control, if we were to break down, to be in the 4,200 area, looks a little unlikely, but certainly that could still be an area in the cards. But look at all of the trade action that has gone on in this zone. This is a monstrously huge accumulation distribution zone from really 8,000 down to where we're sitting here at 6,300. And so that is why I'm looking at the bounce play here, is because we've returned down to this level, and it really does look like, if we go to the hourly, and I just want to look at let's go to the 21st to here. Lots of accumulation from the 21st to now, but let's look at the breakdown area. Let's look at the 24th, 1 o'clock the 24th. and we see there's quite a bit of activity down here. Thinner profile, but this is a wide open distribution range. This is a wide open traded range. This move here did not have a lot of participation in it, and again, it really doesn't have to. But there's a lot of buying wicks here, and we should see if there's a lot of supportive activity that comes in to rally prices higher. And if we're going with a bullish bias moving forward into the future, then it's really important that we get used to getting in on the dips as they happen. So that is the that is what we should see us doing. And if it doesn't, I mean, where's the risk? Not a lot of risk here going with the long trade, because the risk, if you want to look at it, is either below 5,600 excuse me, or this is the basement, okay, and we're a significant distance away from any kind of ceiling. So these are the zones we want to look at as entering in on a long here. So there is a case. I mean, if we were going to go all Elliott wavy on this, this could be just we could have another third leg down, which would bring us probably down to that 4,000 or 4,200 level. That would be the place to go. And then ultimately that would be the kind of final ultimate down looking way. So let's look at some others. Let's look at what is Ethereum doing. Ethereum's almost got a kind of a cup and handle formation that it formed and had responsive buying off of. On the daily, it's got a lot of volume going in on today. Let's take a peek at the hourly. It looks a little weaker than Bitcoin does at this level. Oh yes, Cardano. Looking at the 4-hour chart, we can see we've been forming. I mean, we've got a pretty. This is a triangle of triangles, isn't it? Inside bars, we're forming two double inside bars. We closed this 4-hour in 2 hours, but obviously we've got some very clear defined trend lines here that we're looking at, and we've been in this really doji-ish setup for the past 16 hours, 12 hours that we're coming up on, and the volume's been tapering off as we've gotten lower. But same with, this is kind of the ultimate down line that we're looking at for Cardano. I don't see a reason to adjust the low here yet, based on the prior harmonic levels. So if we do form like another bottom near here, then I would shift this lower. But for right now, holding it as we're coming up against the time cycle here on the 26th, and keep an eye out for that. XLM peeling back a little bit that it had gotten, but I mean, still, it has had a hell of a move over the last few days. Fell down below the arc, but now we've started to want to trend back into it, and we'll see if we actually can trade back above in here and see if this pullback is just acting as a pullback. From a Fibonacci retracement level, we've got it's a little bit below that. Well, it's in between the 3.8 and the 50% retracement, so we'll keep our eyes out for that one. Looking at basic attention token, this one's actually doing a lot better. It's actually catching a bit of a bid as it came down to the arc. It's acted as a pretty nice support level, so it actually looks a lot better than everyone else. In fact, it's outperforming Bitcoin as we speak. EOS kind of getting beaten down again. Just watching to see what it does here. It looks a little overdone, a little extended. So we'll keep our eyes on that. This pivot in time acted as a pretty strong, the square of price and time. We're still within the range where we should see it act bullishly, but certainly in the short term it looked pretty negative. And then Ripple is getting a shellacking again, so let's just measure this out. So let's look at the swings here. Let's take this swing here on this previous right shoulder all the way up. We moved from 26.55 all the way to 79.31, and if we get the percentage that that move was, that's a 198% move. That's a bit of a drive up without a retracement. So, I mean, not surprising that there was a lot of, this was a waterfall stop here that we had. This was just, got up to that 78 or this 79 cent zone and just collapsed. That drop was, oops. That drop was pretty big too. If we look at that, that was a 27% drop in not a very long amount of time. So we've come down. We've tried to hold this arc as support. We've tried to hold the pivot here. Support fell through it. We've come back down to this harmonic. And where is my... Oh, those are inner harmonics. Okay, I get it. So this looks to be a little overbought when I'm looking at these right here. So this would probably pull back. I mean, we've got, this isn't a square price and time, but when there is a time cycle that intersects with a major or an inner harmonic, they act pretty supportive on the short term. So we should see Ripple pull back higher from here. And at least close above the 45 and the 45 cent zone. That should actually pull back up from here. Walton chain coming up against this. This is like the gift horse in the mouth trade. I mean, looking for something that is underperforming the market. It is something that did not really catch a big pump. This one, I mean, you know, any way you look at it, Walton chain had its own little drive back in August, and it has retraced a good chunk of that move. We're looking at, yeah, we've almost come back all the way down. So if you're looking at these fib retracements and they look a little, most of the stuff that you probably read about is you, excuse me, you would see the 382 Fibonacci level here and the 618 down here. Now, that is how you're taught with, like, on babypips.com. That is how you're taught on really pretty much any type of education. But Constance Brown, she's one of the best technical analysts living. I would love to nerd out with her one time, just like pick her brain. But now she wrote a book called Fibonacci Analysis, and I know not a profound title, but it's part of the Bloomberg Market Essentials. And what she made the point is that the Fibonacci levels should be drawn differently, and that they should be reversed. So you draw them the same way, but they should be reversed, the levels. That's what's the most important part. So they're almost like a Fibonacci extension as opposed to retracement. And she, you know, without going into a whole bunch of stuff about the reasons why and all that jazz, you know, let's just just know that this, if you want to be ahead of the game or do something that is the correct way, that is the pro way, this is how your Fibonacci retracements should look. They're the opposite of how they look now. So you still draw them the same, but all you have to do on your indicator is there should be a reverse. Okay, so just hit reverse and then there you go. That's what you want to notice. And it's interesting that on this swing, you know, the previous high here is the 618 fib level, and we're holding at this 236. This is a screaming like entry for me. I really like this entry. I mean, again, where's the risk here? I don't see it. I like Walton chain. at this, but we should look at the Bitcoin pair. WTC, BTC. I mean, really anywhere between 0.44 and 43. All right. And we're coming up against a pivot in time as well. So that's mostly the reason why that is the trade I'm looking at is, and why I want to take it is not just because of the underperformance, but it's because it's right up against this pivot in time. And so we should see prices respond pretty actively against this here. So yeah, that should be a pretty nice trade coming up. So we've got Bitcoin, need to put it on the daily. We got the 4 hour and the 1 hour. All right. 1 hour. That is a beautiful hammer candlestick forming on that confluence zone of those two Fibonacci's. That's a good looking thing to see. We see on the 4 hour chart. Now we don't need to see those fibs anymore. On the 4 hour chart, this is what we've got going on there. So there's looking at the lagging span, the black line right here. Okay. This is acting as a support zone. The bottom of the cloud here is acting as a support zone. And that's why we're really not seeing a big fall through here. I mean, this would be pretty ugly if the lagging span were to cross and close below the cloud on the 4 hour chart. That would be pretty ugly. I mean, that would be pretty nasty to see. The daily chart, it looks kind of yuck as well, but we gotta, I mean, this is actually really bearish looking. We'll have to see if there's any follow through on it, but otherwise, there is some support here on the 4 hour. The daily is seeing some support based on the Fibonacci. We'll see if it holds. Ethereum, let's check that out. Ethereum. So Ethereum, we can see the lagging span is bouncing off of the top of the cloud here. That's a pretty good, healthy sign if we can hold it there. Crossed back above the conversion. Faced resistance. I mean, that's a pretty. There's a lot of stiff resistance for Ethereum here. Taking a look at Litecoin, daily, kind of meh. 4 hour chart, very similar to what we just saw with Ethereum. Looks like we're finding some bouncing off of the top of the cloud. 1 hour, seeing a nice drive here. If we get above the baseline on the hourly on any of these, that's going to be a pretty good sign. Looking at Bitcoin and looking at the daily. Let's get that up here. We've got numerous trend lines. Sitting here. That should act as a support zone. So we'll see how that goes on. Anyways, it is 10:02. I hear the guys starting to drill and hammer, and yeah. Anyways, let's close it a little early, which is fine. Keep an eye on these areas. Again, the two trades looked at is Zcash and Walton Chain. Walton Chain definitely one of the big laggards here, coming up against that time pivot we were looking at. Walton Chain could catch a nice bit of activity here. Not a lot of risk here, and again, not a lot of risk in really any of these because they're already down quite a bit. So yeah, I would say a lot of risk trying to figure out the bottom here in Ripple. This is a pretty a steep drop, but yeah, actually there's quite a bit of people stepped in at that 43 to drive this back up. What are you looking at on the hour here? Not bad. Really want to get above. There's inverse head and shoulder. If we can get above the 45 and 45 degree angle, the 45 price level and the pivot here, get beyond that, we'll could see some nice bullish action return. We'll have to watch it though. Anyways, I hope you guys have a good rest of your trade day. Hope Monday was good to you, and I will see you all tomorrow. Bye-bye.